Sunil Subramaniam as well joins in on the show right now. Sunil, holding out well. The long weekend seems to be working well for our markets because each time you're welcomed by a big move on the global markets. But would you say that the uncertainty on tariffs is behind us now, at least for the equity markets?
I wouldn't say it's behind us, but I think it's definitely calmed down. So I think the markets had, and I think I said this in a previous interaction with you all, I think markets had overreacted as far as India is concerned to this uncertainty of tariffs. So I think all the clarity that's coming, right, whether it's negative for A country, B country, negative for America, whatever happened, it's definitely reduces the uncertainty. And fund managers can plan their allocation. So I think India stands in a very good position here because I don't think there's any negative or bad news. I know there's this Pharma related thing which Trump might come up with. But apart from that, if you see, I think the position for India, whichever way this knife cuts the cake, right, is going to be favorable for India. So I think to that extent, the markets are recognizing that. And also bear in mind that India specific, there's been a slew of positive things which have been happening over the last, I would say, even a month or so, which the markets had not recognized because of this uncertainty overhang. They started from the budget-related tax giveaways to the RBI's policy being very supportive, to initial targets on the monsoon being very favorable, and India's trade deal talks progressing well. I think there was some leakage of things saying that it could be signed very soon. So I think everything positive. So far, the market had not discounted. I think this latest bit of Mr. Trump rolling back then for the 90-day pause, as well as on the electronic components, he brought down the tariffs. I think all of these, plus the fact that the bond market has made Mr. Trump to also now cool down in terms of the action, because that's finally where it's hit them where it hurts, right? I think he was not worried about the dollar. He was not worried about the stock market, but the bond market, because US has a huge $7 trillion refinancing this year of their debt coming up. So I think the bond market is something that they listen to. And to that extent, I think the weakening dollar is positive for India. Oil at Brent is at around $65, again positive for India. So the whole bunch of positive news around India, which unfortunately, as I said, could not be implemented by fund managers taking action. And I think now with the result season coming, fund managers are going to be eager and waiting to take out guidances from the company's earnings and quickly act. So I think you will see this sustained domestic buying now sustaining the market, and FI return, of course, it all depends on the global macro, how that pans out. But definitely, if the actions of the bond market are any indication, it means that Mr. Trump is going to slow down in this whole. I think he's created that major big bank impact. He will now get to the negotiating table and do it, and he will try to manage the situation, which I think is positive from a uncertainty removal for the stock market. So I think overall, reasonably good news. And from a domestic perspective, I think it's time to gradually start accumulating the broad market.
Gradually start accumulating, especially when you talk about in the markets right now. And like you were saying, the confluence of factors that are also positive for the Indian markets. One of the sectors also now everyone is watching out closely would be the entire chemical space, the specialty chemical space. You have SRF, Navin Fluorine in particular that are in focus in trade today. Because the city that's come out with the note, they're saying that they are expecting an increase in the earnings for these counters, given the fact that there is a risk of Chinese firms losing their market share following the US tariffs. And they are expecting an upside of about 23% for SRF in their FY26 EBITDA, while 35% for Navin Fluorine in their FY26 EBITDA. But how should one actually look at this entire space in particular? Because there was a time, Sunil, when they were benefiting with the China Plus One strategy, and it looks like almost 2 years later, this is a similar strategy that is at play for these chemical names.
No, absolutely. And I think that we will be a beneficiary this time of China Plus One, because this time, see, earlier the China Plus One was us trying to snatch from China and to supply to America. Now it's America trying to shut down Chinese imports. And hence the opportunity is now coming from the fact that with the bilateral trade agreement, this is going to be one of those key spaces which I would suspect be a winner from the whole BTA. The only point you should keep watch out for is that China, if US is getting shut as a market, they will try to dump their intermediate chemicals to all countries, including India. So any country other than the US to which these people were exporting, if China is going to compete there by dumping, that could be a threat. Second, China, we have to put strong anti-dumping duties on for Chinese products into India, because a lot of the value chain also comes from China. So we need to protect our industry. So I think both from a regulatory perspective and from a non-US market perspective, one needs to wait and watch all of these. So the US, I think it's only from a US exports perspective, I think this will turn out to be a positive story for the specialty chemicals space.
That's interesting. Some of these names, of course, are flaring up quite well. You've got the likes of SRF, PI Industries, HFCL, etc., looking very strong. Kunal, any of these stocks that you track?
So I think PI Industries is something which I do track, and yeah, I think that stock over the last few days has seen a decent bottom formation on the 3200, 3250 mark. There is some evidence that the stock is now coming back into a bullish crossover mode, moving average crossover mode. That I think could probably propel the momentum for PI Industries. And overall, it's been a consistent moving chart. So I think if we remove this volatility over the last 6-8 months for the stock, we've actually seen PI Industries to be a far more stable chart. So which means that the natural beta of the stock would make a comeback pretty soon. Would be bullish on PI Industries.
All right, so that's the take coming in on our PI Industries. Let's take a look at what the IT space is doing in particular, given the fact that, yes, we are now we've kickstarted the Q4 earnings season. We had TCS that had come out with their numbers. Today, IT sector is in focus, 1.5% up move. With the rest of the market, actually, IT pack also is trying to hold on to gain. In fact, we have Wipro that's all set to report its Q4 numbers, and muted quarter is likely that's in store for this IT major as well. What else is in store? Ansh is here with that. Ansh?
So the company had given a guidance of revenue growth in constant currency terms of -1% to +1% on quarter-on-quarter basis for fourth quarter, and it is expected to be -0.6%, which is well within the guided range only. Now, if we talk about IT service revenue, then that is expected at $2,597 million, which is down by 1.2% sequentially. This is mainly because of weakness in manufacturing and some hurdles in European region. But if we talk about total revenue in terms of rupees, then it may rise by around 1.5% to 22,643 crore. Talking about IT service margin, it is likely to slip 20 basis points from 17.5% to 17.3%. Not much, because wage hike was already absorbed in quarter 3. Whereas if we talk about profit, then that is seen at 3,290 crore, seeing a decline of 2.3%. Now, apart from this number, there are 4 key things to watch out for. First is commentary on Q1 FY26 guidance, especially the top line growth. Second is any insight on BFSI and discretionary spend. And third is trend in headcount and attrition. And fourth is update on consulting business. So bottom line is revenue is expected to grow within the guided range, but the main focus would be on management commentary.
Oh yeah, after TCS, curious to hear what we see from Wipro and then, of course, Infosys as well. But bosses of India's insurance companies will be meeting officials of the Finance Ministry's Department of Financial Services this week itself to discuss pressing matters linked to the industry. Expenses of management, risk-based capital, bank assurance and selection of surveyors are going to be some of the issues that are likely to be discussed. In fact, Anurag Shah, my colleague, is here with all that he's picking up from his sources.
Department of Financial Services officials are meeting CEOs of insurance industry. Tomorrow meeting is scheduled with the CEOs of life insurance industry, and thereafter DFS officials would be meeting CEOs of non-life insurance companies, general insurance companies and standalone health insurance companies. The purpose of meeting is to increase the penetration of insurance where government can achieve the target of insurance for all and the challenges insurance industry is facing. So as per our sources, the issue which will be raised by life insurance companies are related to the risk-based capital, then limit commission and EOM. These are the 3 main issues that life insurance companies will be raising to DFS. Other than that, general insurance company has a list of large number of issues, starting from the automatic selection of surveyors. So companies want that the previous method of surveyor selection should be continued, relaxation in master circular of health insurance, that is also a demand. Other than that, general insurance companies want government intervention for standard billing by hospitals, and implementation of state level plans should also be helped by government. So these are the main demands of general insurance companies, and the government officials and DFS officials will discuss with CEOs of both general insurance industry and life insurance industry.
Just flashing the thank you so much for that, Anurag, but flashing the market flash at the bottom of your screen, a monsoon update right now that we will see above average monsoon for 2025. Let's hear out what the IMD officials have to say.
The press release and then the presentation. So I think I stop here. Thank you.
Well, that, of course, is the IMD highlighting their prediction on the monsoons and saying that India is likely to receive above average monsoon rain in 2025. We are, of course, awaiting more details as to what the, anticipated onset of monsoon is going to be like, whether it's going to be on time, a little earlier, considering that the IMD has also predicted extreme heat wave. Remember, we've already had the hottest March for most of northern India and the western region as well. So let's see what the onset of monsoon is going to be like. As of now, they are anticipating above average rainfall for the entire country. Just want to see what are the other details that we're getting right now, and we are expecting rains to be likely above normal, but I think they spoke a little bit about what the intensity as well is going to be. If we can just get on to the next flash. This, of course, is just the first update that we are seeing on the southwest monsoon. We will get more details. They're seen at 105% of the long-term average in 2025. So as of now, it seems like good news. But let's see whether it's an on-arrival or rather on-time arrival or not, and what the intensity and the geographical spread of monsoon is once it eventually hits the Indian shores. But Sunil, you think some leg up for the just about recovering rural play and rural demand? You think that's going to see an impetus once the monsoon kicks in and is above normal, as the IMD predicts?
Yes, absolutely. And it doesn't need to wait for the actual monsoon being normal. I think they say, the cover of good monsoon means the positivity. See, last year was a good year for the rural space because last year's monsoon was also good. Harvests were better. For some reasons, inflation for the urban consumer went up. But for the rural population, so rural demand was the one which was recovering and held up whatever consumption there was. So already the mood there is turning positive. And I think if they are going to know that they're going to sow well, the monsoon is good, I think their propensity to spend will be higher because it's the outlook for the future which decides today's expenditure. So I think it doesn't need to wait for the monsoon itself coming through. I think IMD's forecast, now SkyMet will follow through. If that comes in, the news spreads about this itself, I think the spending will go up on the anticipation of that. So I think, yes, good harbinger for the rural consumption bit for this rest of the year.
Right, so that is the monsoon update. The fact that is the first advanced estimates coming in from the IMD, where they're expecting an above normal monsoon rainfall for 2025. 105% of the long-term average is what they're expecting. Vinay, that brings me to the next question. If you talk about monsoon, then you talk about also what happens to the tractor makers and the likes of Escorts, M&M, for the matter of fact, even VST tillers, if I could add to that list. How are you looking at these counters in particular on the charts?
Yeah, so Escorts especially looks attractive as of now because compared to M&M, it looks better as of now. So it is on the verge of giving big positional breakout. So the resistance I see is around 3,300. Once that is taken out, then we can expect a good momentum buying. So compare in auto space and especially the tractor makers, I feel that Escort looks quite strong, and above 3,300, it could extend its rally towards the 3,550, 3,600 zone. So looks quite strong in the auto space, and one can even initiate long position at this point of time in the stock like Escorts.
Okay, that's that and some of those, stocks that would tend to benefit if indeed the rural demand picks up and, of course, the monsoon-related theme. Other than that, today, of course, you're seeing a big move on IndusInd, but I want to see what Kotak is up to. HDFC Bank and ICICI Bank, remember, they're due to report their numbers on Saturday, and both these stocks as well looking very smart. In fact, pretty much an identical move, almost higher by 3% on both these names. Axis as well higher by nearly about 4% or so. Sunil, just wanted to understand what your anticipation is from some of these private banking names, and where do you think leadership is going to come in once they report their numbers?
Well, I think that sequentially they will do better. I think they have a good control over the NPAs. I don't see a problem there. I think that given the news that they are cutting deposit rates, it indicates that they are feeling very, very comfortable on the asset and liability space, right? So if they are feeling that the deposit growth is good enough, it gives that the overall sense of their business is good. So I would read into the rate cuts that they are doing today to say that their numbers should be on track. And I think that those with a good spread of network, right, and the top band of the banks. In private sector banks, I would rather play with the top 5 or 6 names, because the comfort of regulatory overhang, as you have seen from some names which have faced challenges, is, I think, definitely less with the top. So I would stick with the top even in this post the result season too.
Right. So look at the top tier private sector companies, even post earnings, or private sector banks in particular, is what Sunil is of the opinion. But Kunal, on the charts, private sector banks, there are a lot of the names to choose from. Which one would you choose, and which one is looking good, actually attractive right now on the charts, given the fact that we've seen a good upside also over the last 1 week or so?
See, we've been discussing Kotak Bank, ICICI and HDFC Bank, but I think now it's time for the second rung underperforming names to make a comeback. Now, I understand IndusInd Bank has been in the thick of a lot of negative news flow, but the chart patterns indicate that the stock could probably have formed a decent base at the 600 to 650 odd zone. We're looking at the first day of a decent revival for IndusInd Bank, about the 720, 725 plus mark. This could probably be an indication that from a medium to long term play, the stock could very well be into very attractive price territories to accumulate for the stock on the longer term charts. IDFC First Bank is something which will start to look very attractive, especially when the stock is back again about the 60 plus mark. There are PSU banking names which I believe are now getting ready for a strong momentum uptake, and I think led by the likes of Bank of India. You've seen that stock doing pretty well for itself. Most of the other names, the likes of Canara Bank, Bank of Baroda, PNB, as well as SBI, I think these stocks could also make a comeback. So now I think we should be looking at a point where we should not be too much heavily dependent on the larger cap private sector banking names, because the breadth would start to open up pretty quickly.
Okay, that's the entire take coming in on the PSBs. In the meantime, today, of course, the story is some of those globally linked spaces which are actually seeing a bigger boom. Sona Comstar, Bharat Forge, Motherson Sumi, these are stocks which are rebounding very nicely. Sunil, do you think while up until now it was all about, looking at domestic facing sectors, maybe one could take a contra call on any of these names, the ones which are more susceptible to tariffs or what happens globally, your Tata Motors, Sona Comstar, Bharat Forge or a Motherson, or would you say steer clear?
No, I would say enter with a staggered approach. Don't put in all your money now. Stagger it over the next 6 months, because what I see is the uncertainty will continue to prevail. There will be days of bad news and there will be days of good news. So there will be volatility. But once you are past this, once there is a BTA signed, everything, I see a huge positive move coming up here. There will be a few losers. So diversify across the pack, but start taking exposure and stagger it. So then, because in a year from now, in a year and a half from now, all of these are going to benefit. The point is you wouldn't know when exactly to have started buying. So I would say start today, but stagger the approach, stagger it over the next 6 months and diversify it across all these international sectors. I think it's a good time to start doing that.
Right. Kunal, I want your view on the pharma space, given the fact there's lots happening in the pharma space. One day the tariff is coming, the second day tariff is not coming, then the tariff is coming not too distant future. What's your take on the pharma space? How should one actually gauge this one? Look at this counter, or rather look at this entire space as a whole at this point in time, or you believe that let the news flow settle down a bit?
Yeah, even the breakout is coming and it's not coming for many of the pharma stocks. In fact, seen many of the large cap pharma names being a lot more sideways in the last few weeks. Yes, we call it sideways, even though the range for these stocks has almost been 10%. And, it's not typical of the pharma stocks to have such kind of a wide range, because we know that historically that these stocks are defensive, low beta. They tend to remain into a tight sideways ranges for weeks and for months before these stocks they gather momentum as well as start a decent uptrend for themselves. But many of these stocks have still yet to confirm a breakout of the previous major swing highs, and I'm talking of it from the last 2-3 month perspective as well. So there is a sign of confidence emerging that these stocks have probably the worst for these stocks, at least on the short to medium term charts, is behind. But then you would want to buy confidence, you would want to buy breakouts, and you would want to buy confirmation. That is still pending for large cap pharma names, and that's why you're seeing that in good days of the markets, you might probably have 1 or 2 odd pharma stocks which could do pretty well. But then as a sector overall, the momentum is yet to come back.
Kunal, Tata Motors, that was your contra call last week, right? And now, of course, the stock is moving along with some of the other globally linked auto names. What next do you see on the charts?
I see a very strong revival, Aisha. I think the at least the major part of the worst for the stock seems to be now behind. Price-wise, I think that 550, 575 mark, where we initiated the contra buy for Tata Motors, was a multitude of indicators where the stock had come back to an oversold territory. Whether it's the RSIs, which were into deep oversold on the weekly, monthly, and the quarterly charts as well for Tata Motors. 6 or 7 consecutive months of a negative price downtrend, 50% reduction, 50% of a drop for the stock from that 1150 plus mark, which was the high for Tata Motors in August, September 2024. So all of those factors indicate that we are looking at a point where the stock may not just revive 5-10%, but we could be looking at a substantial upside for the stock. And I think the major indicator which I'm looking out for Tata Motors is that mean reversion towards the 200-day moving average. The stock at one point was almost 30 to 35% lower from its longer term moving average. So even if it goes into a mean reversion phase, we could be looking at least a 150 to 200 point jump on Tata Motors further over the next maybe few months.
All right, so that's the take coming in on Tata Motors and how it's looking actually on the charts at this point in time. Sunil, what's your view actually on this entire quick commerce space and QSR space? Because of late, I've read a lot of brokerage notes saying that looks like the QSR space is going to make a comeback. Are you of that camp as well?
Yes, I'm of that camp. The only thing is that finding the winner is going to be challenging. So again, my philosophy is to diversify across all the quick commerce players. But I think overall, the quick commerce market is going to grow rapidly, boom. Who will win? Who will give more discounts? Who will incur more losses in a longer term win? That's hard to say. So diversify, because it's a space as a whole which will do well. And I think the market will respect that. So stay invested in that space. That's my recommendation.
Guys, that Zomato is now officially called Eternal. Let's just bring up that stock up for you. So we'll have to get a little used to calling Zomato now Eternal, but 222 is where that stock is. Kunal, eternally strong? Yeah?
Yeah, it's a change. It's difficult to try and remember these changes in names for stocks. But for Eternal, as well Zomato, I think the charts are becoming a lot more better. So on the weekly charts, for example, we are on the verge of a very big trend reversal breakout for Eternal, where the stock from 300 levels fell down to sub 200 mark, and now I think we are looking at a potential revival of sorts. So my sense is that the stock, say if it crosses levels of 225 to 26 on the weekly basis, we could be looking at a substantial reversal of trend and potentially a breakout closer to that 265 to 70 mark as well.
All right, so that's the take coming in on Eternal, erstwhile known as Zomato. And like Kunal was saying, we all also have to keep up with pace with the name changes, isn't it, Aisha? It's very difficult. You have a lot of companies.
Still Motherson Sumi for me.
Yes, still yeah. Motherson Sumi for most of us actually. That is Samil for you, Samvardhana Motherson. So yes, we have to keep up with the name change as well. For now, Eternal holding up strong, and also the prospects for this one also looking bright going ahead. If you look at some of the pockets of the market right at this point in time, yes, the realty pack is holding on pretty strong. And if you look at the Nifty, the entire construct of Nifty is just ITC and HUL. That's in the negative territory at this point in time. In fact, they're trading just mildly with negative bias in today's trading session. And Sunil, you think now you will look at these FMCG names, given the fact that we are in new financial year And now you will also have all those tax cut bonanzas also at play. You have the interest rate cut bonanza also that will be at play for in order to benefit most of these FMCG players.
I would put more of my money on the consumer discretionary space as opposed to SMCG, because I think that the giveaway will be used by people to leverage to buy better products. So whether it's bigger refrigerators, bigger air conditioners, bigger cars. So I think people use it to upscale, because it's the middle class we're talking about. And the FMCG piece, just because I get more money, I'm not going to go and buy more soap or more hair oil. So FMCG, I think I would closely track from their input perspective on the margins to look at how the commodity cycle, they are heavily dependent on crude and the commodities. So that's a good reason to buy FMCG from a margin perspective. But on core demand, right, on FMCG, I think that this tax giveaway will benefit the consumer discretionary rather than the consumer staples. So just for volume growth, I wouldn't go for that. But for margin, I would look at specific companies and buy.
So good having you on the show. Thanks for your time as always. We'll, in fact, let Kunal also go on that note.